Malaysia's unemployment rate was down to 3.7% in July 2022 compared with 3.8% in the previous month as the labour market situation further improved due to the continuous operation of all business activities. The number of unemployed persons declined to 620,700 in July this year from 630,600 in June, according to the Department of Statistics Malaysia. According to the DOSM, the labour force situation increased 0.2% month-on-month to 16.6 million persons compared with 16.57 million previously. Thus, a higher labour force participation rate was recorded during the month at 69.6%. The OSM said that the number of employed persons in July 2022 continued to register a positive growth of 0.3% to 15.98 million persons. Specifically, employment in the services sector, manufacturing and construction services continued to expand, while employed persons in the agriculture and mining and quarrying sectors declined. In the meantime, the number of persons outside the labour force continued to record a reduction of 0.1% to 7.25 million persons versus 7.26 million persons in June, according to the DOSM. Following this, senior economist Julia Goh and economist Lok Siu Teng of UOB Global Economics and Market Research revised their year-end unemployment rate forecast to 3.5% from 3.6%. Forecast for the 2023 unemployment rate was also revised downward to 3.2% from 3.5%. The revision means that the Malaysian labour market is likely to fully recover to pre-pandemic levels by mid-2023 if the domestic economy grows in line with the economist's forecast of 4.8% for 2023. It should be noted that the unemployment rate was 3.3% in February 2020, just before the nationwide MCO kicked in. A US court on September 7th had granted IHH Healthcare's request to dismiss US-based fund MCOR Secure Private Capital Trust's amended complaint for a suit involving damages in excess of $6.5 billion. However, the matter may not be done and dusted as the US Federal District Court for the District of New Jersey had attached certain conditions to the order. In today's boss filing, IHH said that under the conditions, the matter may be reopened if filed in the Indian courts, and that IHH and the other defendants are to waive any arguments and that the appropriate time for MCOR to initiate legal proceedings has lapsed. IHH said it has been advised by its counsel that MCOR has the right to appeal against the order, provided that a notice of appeal is filed within 30 days of the order. The healthcare group says that it is still in the midst of seeking legal advice in respect of the order and in the event of an appeal by MCOR. IHH adds that it will make a further announcement as when there are any material developments. To recap, on June 16, 2020, MCOR had filed a suit against IHH and others pertaining to allegations in connection with the issuance of Fortis Healthcare shares to IHH's subsidiary in 2018. MCOR broadly alleges that it has purportedly suffered losses as the defendants had allegedly conspired to frustrate a proposed share acquisition transaction between Fortis and MCOR's supposed predecessors. Fraser and Eve Holdings plans to leverage its products to gain more market share while expanding its footprint, especially in the global halal market. Government and Industry Relations and Halal Affairs Director Datuk Rafiq Arif said, taking the example of its oyster-flavoured sauce and soy sauce from Sri Nona, explaining that the products have great prospects to venture into deeper markets, especially in Muslim-majority populations. He said that FNN is now present in 88 countries, including an office in Dubai, according to Bernama. Meanwhile, he says the group is in the final stage of acquiring a 2,800-hectare dairy farm, hoping that once it's complete, the farm would enable the group to operate in a more sustainable manner while keeping its product prices low for consumers. Besides that, he says FNN is still looking into more acquisitions, especially in the food-based segments, following the acquisition of Sri Nona, Cocoa Land and the dairy farm. However, he declined to elaborate on the group's future acquisition plans. Malayan Flour Mill's partially owned subsidiary Dinding's Poultry Development Centre has received a 1-month extension from the Malaysia Competition Commission to submit its written submissions. This is in response to the proposed poultry feed price-fixing decision MyCC had levied against it. In a BOS filing, MFM said that MyCC has extended the deadline for DPDC to file its written representation from September 20th to October 21st at noon. MFM joins PPB Group's 80% owned subsidiary FFM and Leong Hup International's unit, Leong Hup Feed Mill, in having received a 1-month extension. To recap, on August 5th, MyCC had issued a proposed decision against 5 feed millers, saying that the Commission had provisionally found them to have infringed the Competition Act 2010. They had allegedly done so by entering into anti-competitive agreements and concerted practices in increasing the price quantum of poultry feed. In the event DPDC is found to have infringed the Competition Act 2010, MyCC has proposed to impose a financial penalty of 70.02 million ringgit, up to 10% of DPDC's relevant turnover. CME Group, which manufactures firefighting and safety vehicles, has bagged a 145.8 million contract to supply 150 units of compact fire rescue tender, complete with fittings and accessories, to the Fire and Rescue Department for 72 months. In a Bursa Malaysia filing, CME says its wholly owned subsidiary CME Edaran had on September 8th received a letter of acceptance from the Ministry of Housing and Local Government for the order. CME says this order is expected to contribute positively to the group's earnings from FY23 onwards.